everyone, and welcome to Osino Resources Live Investment Summit today, hosted by Six. We're joined today by Heye Daun, CEO of Osino Resources. Heye is going to walk us through a company presentation, and after, he'll be accepting questions. You can submit your questions using the Q&A panel found on the right-hand side of your screen. As always, this summit is being recorded and will be available to watch afterwards on Six.com. Now, without further ado, I'll hand it over to Heye to kick things off.
Thank you, 6X, and thank you to all the attendees who dialed in this morning. I believe we have a pretty full house here. So I'm the founder or co-founder of Osino Resources, and I'm the CEO and president. And I'll just give you an overview here. Those of you who've heard the story before, just bear with me. I will go back into the background, and I'll do it a little bit more detailed than I do it often otherwise, just because I believe there are a lot of new callers on the line. So Osino is a advanced exploration and development company active in Namibia, and we recently made a very exciting grassroots open pit gold discovery, and we are now engaged in advancing that discovery as fast as we can. And the first important step along that path was the publication of our Maiden Resource, which we put out a couple of days ago. And of course, lots of news flow and so forth is still expected to come out over the next few weeks, and I'll tell you more about it. But before I do that, let me take a step back and just tell you the history of this company, because it's very pertinent and very relevant to what we are doing and also to the success that we are having so far. So in my case, I'm a Namibian citizen. I was born in Namibia. I'm of German descent. My parents emigrated to Namibia years ago, and I was born there. I became a mining engineer. I worked for Rio Tinto and a bunch of other credible mining companies, and I ended up building and operating a variety of gold mines in Africa. After many twists and turns in finance and in sort of other mining-related sectors, I came back to Namibia about 10 years ago, and I, together with some partners, I acquired another gold project in Namibia called Otjikoto, which we took public. We advanced it, we drilled it out, we took it to a PEA, and we then sold it to B2Gold. And B2Gold did a fantastic job building a gold mine onto it, and they are now producing very, very profitably from that mine. In fact, that mine is a real high-quality asset, good production rate, amongst the lowest cost production in the world of any open pit. It's got some amazing numbers. And after we did that, so that sale, that happened quite a while ago. That was about 8 years ago in 2012, 2011, 2012. The mine started producing in 2015 actually. So I left B2Gold, and then I got together with my old partners, especially Alan Friedman, the co-founder of Osino, and we said, let's do it again. At the time, the sort of issue that we had is that Namibia does not have many advanced assets, so we actually had to do it from scratch. So we put together a land package. We came up with a very good sort of geological and technical thesis on how we should explore. We hired a top-class technical team. Importantly, we met some very, very good investors, chiefly amongst them Ross Beatty, who has worked in Namibia when he was a young geologist, and he took a liking to me. I did another deal. I sold the company to him in 2016, and he became our cornerstone investor. So in the dark days when gold was dead, we were able to start a credible, systematic exploration program in Namibia. This is now 2016, 2017, and 2018. And then in 2019, after 3 years of hard work, systematic work, we made this discovery called Twin Hills, which you're looking at on the slide here on the cover. So that was towards the end of 2019. Actually, in September 2019, we announced that discovery. And then we just kept pushing our foot down on the accelerator. So initially, we did a couple of rounds of drilling, and the discovery turned out to be real, in inverted commas. We realized that it had scale, extent, and had a lot of potential. And then when the gold price started ticking up at the end of 2019, we did a financing, raised some money, which allowed us to really get going. And we got initially 4 or 5 rigs onto it. And eventually, towards the middle of last year, we got 9 drill rigs onto this property. And we just drilled like devils throughout 2020 last year, with the intention of turning that Twin Hills discovery into a maiden resource. And that's what we put out now. So it's been a huge success in terms of geological sleuthing, finding this through cover, because most of Namibia is under cover, and that's actually one of the reasons not more has been found in Namibia so far. But not just that, we didn't just find it, we also accelerated it and fast-tracked it. I mean, to go from discovery to a 2 million ounce resource in less than 18 months is a real achievement. I'm actually very, very proud of my technical team who did that. And so we spent most of last year basically drilling, and we then, towards the end of last year, we initiated technical studies because from my deep conviction and commitment, actually, and not just commitment, actually conviction and knowledge and experience of these type of projects. I told you I'm a mining engineer. I've built and operated gold mines before. So I really know what works, what can become an operating gold mine. And I realized very early on that this would become an operating gold mine. So we took a decision early on, even during when we didn't even have a maiden resource yet, we took a decision to, in parallel with the drilling, to advance the project technically from a development study perspective. So we appointed Lycopodium, and they initiated met test work and a range of technical studies, which will allow us to continue to fast track this project post this maiden resource. Because yes, we announced this maiden resource a few days ago. It's a great milestone, but we're not resting on our laurels. We expect to put out a high quality PEA very soon, and to follow that up with ongoing drilling, feasibility, and basically to push the project forward as fast as we can to the construction and the production stage. So I'll get into the slides for a moment. So that was a lengthy introduction, but I think it should, or the intention was to give you the background and the key pieces. So what you're looking at over here is the Twin Hills project in the center there. You can see all the drill pads and clouds, which was a high-grade discovery that we made very recently at the bottom of the picture there. You can see Namibia. It's a fantastic place to operate. I'm in Namibia and I know my way around there. And yeah, it looks and feels like Nevada or like Western Australia. Bear in mind this, just briefly, the disclaimer, of course, you know, I will be making forward-looking statements and so forth. So just note all the disclaimers here. So very briefly, I've told you a few of these aspects and I'll repeat some of them. So this is a true virgin or grassroots new discovery. This is not an old asset that we're just dusting off and repackaging and repromoting. This is actually a new discovery that is rapidly coming into its own through fast tracking. As the team, I spoke about my own background. Of course, you know, I've been on all sides of the table in the mining game, so I know very well what I'm doing here. We've got a very strong geological team, and I mean, the results here speak for themselves. But we also have very good Canadian market relationships through some of our partners. Alan Friedman, my partner, is based in Toronto. He's got great relationships with the broker universe. I'm based in Cape Town, so I'm closer to the action. I focus on the execution. So we've got a great team that complements each other well. Importantly, the cash, as you all know, junior mining, I would consider one of the biggest risks is to run out of money. So we made a lot of effort from the word get-go to put together a diversified and high-quality shareholder base. And I think that really sets Osino apart. If you look at our trading history over the last 6 months of the year, if you will see that when the market was good, we tended to outperform, and when the market was bad, we underperformed less than the rest. And I think that is testament to the stickiness of our shareholders. So that's very key. But of course, what is key as well is that these shareholders are continuing to fund us. As you know, exploration costs a lot of money. Being in Namibia speaks for itself. So it's a low-risk jurisdiction, no Kalashnikovs, no Ebola. We do have a bit of COVID, but other than that, it really is a very mining-friendly, mining-conducive country to operate in. And being strongly Namibian, or being virtually completely Namibian as a team, we of course know how to navigate this country. And then lastly, we still have a very enviable share structure, just over 100 million shares out. We haven't issued shares since, we haven't done any financing since about the middle of last year. We do have a couple of warrants outstanding, which are coming due soon, but all in all, still a very tight structure. And Ross Beattie, of course, is the cornerstone investor there. He still owns 14%. He's still the biggest shareholder. My family and I and Alan Friedman, we own a significant slug in different entities. And then we've got resource capital funds and basically the who's who of North American resource financing. I speak to these shareholders regularly, and they're very stable. They're in the story. They love the story, and they behind us in accelerating and advancing it. We've got great broker support. As you can see, there are 5 analysts currently covering us. There's another one that will be launching soon, and we've had a very nice share price performance. I've only shown it. I'm showing it here relative to GDX, but you can compare us to any of our peers. We're looking pretty good. So in terms of the resource, these are a little bit technical. I know this is I don't mean to patronize you guys when I talk about a retail crowd, but you may not be interested so much in the details. Please feel free to contact Julia Becker at any time. I'm known to make an effort to be in touch with any shareholder. So if you have specific questions or you want to talk to me directly, send Julia an email and she'll set it up and we can go into the details. But very broadly speaking, so we have indicated and inferred resources. Unfortunately, 43-101 precludes me from adding them up. So you have to do it yourself, even though I'll help you along from time to time. So of course, speaking with discretion here. So if you add those up, that green line and if you add the green line up across the page there, we have 1.9 million ounces in inferred and indicated resources running at about 1.1 gram. So that's the total inventory of resource that we have. What is very important to explain is that that's not always, or not all of it will get mined. So what happens is when you move from resource to the mining stage, you do this at a higher cutoff grade, and that's why I've highlighted this 0.9 cutoff, which indicates that we have about more than 1.3 million ounces still at 1.3 grams per ton. So there's very pleasing talk to the upside, and I think as we drill this deposit more densely, there's a good chance possibly that this grade will increase further with discovery of additional high-grade shoots with denser drill spacing and so forth. So it is clearly and definitely an economic resource. At these grades, we are going to have 50% plus margins, and the PEA that we're planning to put out in a couple of months' time will show that. Don't worry too much about the assumptions. We can discuss it on another call. Suffice to say that the assumptions are broadly in line with our peers. The resource is not very sensitive to gold prices. We've run it at 1,500. It doesn't make a big difference. And again, in the PEA, we'll discuss this in more detail. In terms of the sections, I don't have to go into too much detail. It's a structurally controlled, sedimentary hosted deposit. So that means it is generally highly disseminated, highly continuous. These things tend to bulk up. So I do expect that these resources will continue to grow with further drilling. And we've got a very good understanding now what we have. Clouds was very pleasing. It's a high-grade discovery that we made a couple of weeks ago, which has not contributed much to this resource yet, around about 150,000 ounces. But as we drill it more, I believe that it will continue to grow. So there's a lot of upside remaining here. This is just an isometric view, the lay of the land, the main pit, and the satellite pit, how it's going to be mined when we get there. In terms of classification, so far the resource is 80% inferred, 20% indicated. But an aspect that I'm going to highlight here that is very, very important is the fact that we are very confident that a very large proportion of this inferred and indicated resource is going to convert into reserves, and it will do so much quicker than most people expect. We plan to do around 35,000 meters of infill drilling in the rest of this year. So by the end of 2021, I think you could expect I'm looking for words, much more than the majority of the deposit, possibly 80-90%. I don't want to put numbers on it, but a very high proportion of the resource will convert to reserves. And that's of course important because it de-risks it further, and it should increase in an increase in rating. As you know, reserves are generally valued much higher than resources. So in terms of the key technical objectives for the year, getting the resource out, it was key. That's step number one. Step number two is the PEA, which will come out around mid-year. We've done the numbers. It's far advanced. It was done to around about the pre-feasibility level of detail, so much more than you would ordinarily do for a PEA. It's much more than the desktop assessment. We'll get some news out about that soon. And then in the second half of the year, we plan to do much more development studies in order to get to an advanced feasibility study or something like a definitive study late this year, early next year. And then basically you have a reserve with something like a definitive feasibility study that's materially de-risked, probably only needs a mining license to be granted, and project financing, and then it could be put into production. So, our aggressive internal target is to do everything I've just said by the middle of next year, and in the second half of next year to actually move towards construction. I know it's an aggressive timeline, but it's doable. There's one other example out there, West African Resources, and for me personally, I've made it my mission to better their record of 5 years from discovery to production. That would be wonderful, and I think there is a chance that we might achieve this with Twin Hills. Of course, we will continue to de-risk the project through the application of the mining license, which will come later this year, various feasibility studies, trade-off analyses, and so forth, acquisition of surface rights, and then importantly, greenfields exploration, because what we have now, the resource that we have now, that's not it. There's going to be more through this exploration. I'll talk about it in a minute. Just on Namibia, I'm not going to belabor this point. I said it earlier. It's a very friendly country. It's scenically beautiful. It's a great place to travel and to live, but it's also very mining friendly, and it's got a lot of large international operators there. So it literally is like operating in Canada or in North America. Okay, so we have a large land position, as most of you will know. We focused currently on the Karibib district, where we control the entire district. That's where there's one world-class resource or actual mining operation in place. We're about 20 kilometers away from it, and we expect that we will make further discoveries along that trend. But apart from that, on the remaining ground, we are doing active exploration with the aim of making further discoveries. At the moment, the company is not getting much value for it, and we're looking at some strategic options in the future, what we can do with it or how we can extract more value. But we are active on that ground. So just zooming in briefly, so we are in a classic setting. It has not been discovered previously because it's all undercover. That we brought some very innovative techniques to Namibia, which allowed us to explore through cover. We didn't sort of come up with these techniques ourselves. We copied it from what the Australians did in Western Australia in the last 10 or 20 years, and we adapted it to local conditions, and it has worked out wonderfully. So I think it will open up other areas for us. It is a highly fertile setting that we have, this orogenic camp or district. We control 70 kilometers of this regional structure. We've currently made 2 discoveries on it in this sort of 15 to 20 kilometer camp that you see outlined in this contour here. And we are very active with greenfields exploration to try and make more discoveries there. Just to let you know, there is a neighboring operating gold mine. It has a very large resource, 4 or 5 million ounces left. It's about 2 million ounces of past production, still in production. It's a sort of an open secret. It might come up in a sale later this year. And that is, of course, very good for us because it's going to shine a very light, strong mergers and acquisition spotlight onto Osino. And there are various permutations how we could benefit from M&A in this area. Obviously, there's a case to be made of 1 + 1 could be a lot more than 2. But that's for another day, that discussion. So just exploration history, I explained to you, we employed some unique techniques. We do have lots of gold showings elsewhere along the trend, and we are active at various stages along that trend. Just on the resource, I don't have to go into a lot of detail. This is all the drilling we did in the last 15 months, say. And in 6 months' time, when you look at this diagram, you'll just see it peppered with almost double the amount of holes. So you can expect lots of good infill results, but also hopefully some very good ongoing results from step outs and from exploration, what we call brownfields exploration. That's actually what you can see on this slide. So I've just sort of hovered out with the helicopter. I've zoomed out a bit. What you're looking at here is a mag image, sort of 20 kilometers bottom left to top right. Mag is important because, remember, I said it's all undercover. The rock is covered, so traditional exploration techniques don't work. So we used mag as a pathfinder. Mag indicates structure. Structures are the conduits for these mineralizing fluids, gold-bearing mineralizing fluids that moved through these structures when this deposit was formed. And as you can imagine, when these fluids moved through here, they wouldn't have deposited just in one or two places. So far, we found a major trap in Twin Hill Central, another one in Clouds. But, it is we haven't done the work, so I can't say it's a geological certainty, but it's a very high likelihood that there's going to be significantly more. But as you know, finding a needle in a haystack, you got to get lots of holes in there. Or as a famous South African golf player, Gary Player, always said, the harder you try, the luckier you get. Translated into exploration, that means you just got to get holes in there. And that, of course, increases your chances of finding. So we made a call at the end of last year. Last year we focused on resource drilling to get the 60,000 meters of drilling in there to get this resource on the table, and we've done that. So from sort of middle to end of January, we focused heavily on brownfields exploration. So we identified these 14 targets, which are within 10 kilometers of the central pit. They are various targets, magnetic, structural, geochem. They are high quality targets, and we are systematically drilling them off. In fact, the 25,000 meters that we plan to test these targets, basically all these colorful dots that you see here, about 2/3 of that drilling has already been done. We haven't received the assays because one of the problems that we currently have is that the sample turnaround time has gone through the roof. We've had a crusher in Namibia at the lab. We've got a Canadian lab company called Act Labs. Their crusher broke down, so nothing they can do about it. These things happen. But because of COVID, we can't get a technician there. So our sample turnaround is now between 50 and 60 days. So it's very bad. We're working on fixing it. And when that happens, our sample turnaround time should increase again. So that brings me back to the drilling. So I can only tell you about visual interpretation. And visual interpretation, of course, is dangerous because it doesn't always come true. In our case, our core is very boring looking. So often the boring looking stuff is good and the good looking stuff is bad, etc. So these are just the disclaimers, but we are seeing very encouraging visuals on the core that we've drilled. In particular, Terminal 1 and Terminal 2. These were conceptual targets where we have a secondary splay coming off the major structure. That's a textbook structural trap. And so we drilled some holes in there. We saw encouraging arsenopyrites and other things that could indicate gold. So that's nice. We saw some interesting stuff in the decks. That's about 2 kilometers away from Twin Hills Central. And we also saw some interesting stuff in T-Dog. We were hoping to see the grey wax, which is the prospective horizons in this drilling to the south. We called it the southern fault repetition. Some of the guys on the call might know what I'm talking about. Doesn't look so good over there, but that's how it goes. In exploration, you win some, you lose some. You can't expect that every hole will hit. I think if one of these 14 hits, I'm very, very happy. And just by having drilled these doesn't condemn the area. I mean, you look at these lines, for example, they are generally up to 800 meters apart. So there's still a lot of scope for further exploration. So yes, I think this is very exciting because hopefully with another discovery in the next year or so, we can turn that into another satellite pit. Of course, it doesn't happen overnight to turn these things around. I mean, to give you an example, Clouds, we drilled for the first time 2 years ago. We put 2 holes into it. We got very light sniffs and we walked away. And then last year we came back in, we drilled 10 holes, and that's only when we hit. So that's how exploration goes. Okay, so in total, we put out a press release a while ago. We said we'll drill 75,000 meters this year. We've actually completed more than half of that already. So I do think that we are going to drill a lot more this year. We're going to do a budget rerun mid-year, and I expect that we will probably end up drilling 100,000 meters or so this year. About half of it will be infill drilling to get this to the indicated and measured resource and reserve stage, and the rest will be brownfields drilling, follow-up, and feasibility drilling. Okay, that's on exploration. I'm coming to the end. Got another couple of minutes before we do question time. So just on the development study. So I'm sorry that I haven't put out more news on this so far. To be honest, I have just been too sidetracked, but we've made very significant progress, especially on the metallurgical side. Lycopodium is a high-quality group out of Australia. They've built most of the West African and African gold open pits in the last few years. They really know what they're doing. And they are handling our PEA currently, and they may handle our feasibility process thereafter. We've done various rounds of met test work, it's already clear that our process route is vanilla, straight off the shelf, no fancies. It's a straightforward free milling CIL process that should get recoveries between 85 and 90%. And we are currently doing optimization studies to improve that. So that's already feasibility level of work. We're working with industry-leading specialists like Real Mercedes-Benz on hydrology, environmental, met test work, geotech. All this stuff is far advanced. So I've previously said we'll bring the PEA out at the end of May. We may move that back a month or so. We'll see. There's some tactical reasons for why we might want to hold it back a bit, and I won't go into too much detail here. But around about middle of the year, the PEA should come out and should put the economic numbers on the table, and that's of course the next very important step in the fast tracking and de-risking process of this project. So in terms of work program, lots of drilling, as I said, quite a bit of greenfields exploration on the rest of the ground, and then the yellow stuff is lots and lots of development work. In terms of cash, we have enough money in the bank to pay for all of this. We do have some warrants coming due in July. We may accelerate some of them, so there's another $10 million coming in of warrants that are currently in the money. So we are truly financed well into next year. So a very comfortable position to be, and that allows us to keep our foot on the gas pedal. And that's me. That is my major mission in this company as a founder and as a CEO and as a significant shareholder, is that I just want to drive this thing forward as fast as I can, because I think that's where the value lies. We know we've got a gold mine here. I've just got to demonstrate how big it will be, and I think it will be big. I have no doubt about that. So in summary, I hope you can tell that we know what we're doing. We've created value before. My partner, Alan, has done this in a variety of sectors, not just in mining. In my case, I focus on mining. I've had 2 exits in the $180 to $200 million range. And this is my 3rd gig, and I'm heavily focused on it. Of course, being a Namibian, I have a strong sort of patriotic citizen and shareholder hat on. So I'm going to make damn sure that we get this right. And I'm very proud, actually, what we've achieved so far. And I think we will just keep on going in this vein. Of course, having a discovery that we've made ourselves is wonderful, because we've got a blank canvas and we can steer the ship in the right direction. It's not like we saddled with legacy or with problematic assets as so many other companies are. Namibia speaks for itself. And of course, our shareholders, I don't have to elaborate further, but it is a key aspect of Osino that we have these sticky, high-quality shareholders, which control a very large part of our share register. And then the exploration pipeline, which we don't speak that much about, but it is still significant. There's a good chance we may make further discoveries elsewhere on our license position. So in closing, maybe I should just say I truly believe we are one of the best risk-adjusted return. Sorry, it's a bit of a mouthful. What I'm saying is, we're one of the best risk-adjusted return opportunities out there, because financing risk largely mitigated, geological risk largely mitigated, management risk I think largely mitigated, and lots of upside. So all we have to do is keep executing, and the rest will take care of itself. So I'll pause there. Julia, over to you. I believe that you're going to handle some Q&A.
Hey, that was a great presentation, Heye. We do have some questions that have come in. That was a great presentation. Love it. We'll have to see if you don't repeat yourself too much. But let's start with a question that actually came in to the company directly before the summit. How does the Twin Hills compare to the B2 Gold's Otjikoto mine in terms of resources, size, etc.?
Yeah, I love that question. Thank you, because we compare so well. As most guys or ladies who've been observing this company know, that Otjikoto gold mine, and you've said it perfectly, is our leading light because we know it so well. I used to own it, so I know it intimately. And so having seen how successful that became as an operator, I knew if I can replicate technically what Otjikoto represents, then I know, then I've got ultimate certainty that this thing, Twin Hills, will work out. So therefore, to the actual question, how does it compare? So we've got 1.9 million ounces inferred and indicated. which is almost exactly the same number that we had when we sold Otjikoto to B2Gold in 2011. Back then, we had 1.9 million, also inferred indicated. The grade we had at that time was slightly higher. It was about, can't remember, I think 1.4, so marginally higher. We had just made the Wolfshaag discovery. That was a high-grade additional pit, which B2Gold then drilled out and made it bigger. And that was a very important kicker for Otjikoto, and I think Clouds for us could be a similar kicker. So therefore, in terms of resource size, we are very similar to where Otjikoto was at feasibility stage. But what you must remember is it took the owners of Otjikoto 13 years from discovery to 1.9 million ounces. 13 years. And we needed 18 months. Of course, it's different. We better funded, more conviction. It's different, but it really that's I'm very proud of that. Metallurgically speaking, Otjikoto is better than Twin Hills. They've got an incredible recovery of 99, 98%. It doesn't look like we'll get there, maybe, but our stuff isn't quite as good, and that's okay. But so that's one difference. The other difference, as I said, our grade is still marginally lower, but I think we still have many opportunities to improve that and get it to the same level. In terms of size, we just at the beginning, but we have 1.9 million ounces. I think we have a chance of becoming bigger than Otjikoto, and I say that because of this significant exploration upside. Because one of the things that B2Gold have not had so much success at was with ongoing exploration, and I think that's going to be different for us. So therefore, in summary, I think we are very, very similar to Otjikoto. We look the same, we feel the same, we same mineralogy, same structural setting, similar grades, similar metallurgy, not quite as good, but better upside. I think that sums it up.
Great, that's awesome. We've had a few live questions coming in, but I'll ask the other question that came in prior, directly to the company. Has COVID slowed down any exploration over the year? Is the drill program for 2021 on track?
Yes, the drill program for 2021 is not just on track, it's far exceeding expectations. I said 75,000 meters for the year, and we've actually completed just below 40,000 meters already. If we keep going like this, by July, we would have finished our program. So we are well on track. Where COVID has affected us is with the lab turnaround time. So yes, unfortunately, that's taking longer, and that's why the results have been slower than expected. Other than that, last year, of course, we were affected because we couldn't travel, but we have a virtually 100% Namibian team, and they operated by remote control via Zoom, so that worked quite well. So no, other than that, no real impact, except that, you can imagine that a lot of producers and mining companies are watching us and they're talking to us, and some of them have wanted to visit the site, and that's difficult at the moment from a Canadian quarantine perspective. Even though traveling to Namibia is easy, you just do a PCR test and you can travel around.
Right. Yeah. Well, I mean, that is the world we live in today, right? Prar Agnerian asks, what is the mineral assemblage of the deposit?
Whoa. Okay. I'm a mining engineer, not a geologist, so I'll do my best, but don't shoot me if I get it wrong. Basically, I think I said it earlier, it is sedimentary hosted, structurally controlled. We have all the pyrites. We have pyrrhotite, arsenopyrite, and pyrite. Because of the pyrrhotite, which is magnetic, we found the deposit because that allowed us to use geophysics to home in on the structure. But we do have arsenopyrite as well, which is probably the reason that our recovery is a bit lower than Otjikoto. But I know I'm only halfway answering that question, so maybe that caller can send an email to Julia, and I can actually send them a credible geological description of the mineral assemblage.
Absolutely, and I'll remind everyone in attendance right now that there will be a survey going out to you where we'll be providing all of those contact details. Absolutely. James Totham asks, do you have a sense of where the NPV, IRR, and AISX will shake out for the upcoming PEA? Any of those, if you like.
No. I do have those numbers, but unfortunately, 43101 does not allow me to talk about it freely. And I'm a very open. Most people know me. I'm an open guy. I sometimes speak too quickly, but I can't do it on this call, unfortunately. Let me try to answer it in a roundabout way without giving actual numbers. So, capital is going to be industry leading from a capital intensity perspective, as measured by, let's say, dollars per production ounce. That's a good measure. So low capital intensity. NPV, I can't tell you, but I can tell you that if you look at the analyst consensus, I can talk about analyst reports. They're all giving us an NPV of around about 400 and something million for the PE, for the project NPV, which puts us at a price per NAV multiple. That's a commonly used valuation multiple at probably in the 0.3 range. So we are, by any measure, substantially undervalued. And the reason for that is, I would say, twofold. One is just generally the market isn't aware of how fast this project is evolving. But secondly, the development space and junior space is currently undervalued because there's market mispricing. And that's why I think Osino is a great opportunity to acquire the shares now. In terms of sustaining costs, it's going to be probably similar to Otjikoto. Remember, it's the same rock, it's the same mining technique, similar production rates, maybe a little bit higher than Otjikoto. Otjikoto has amazing costs of $500 an ounce. I don't think we'll be there. Maybe 700, 800, but I can't tell. You know, the PEA has to put that on the table. But the numbers are going to be very good. This is not going to be a marginal project, that's for sure.
Awesome. James is also asking if you could discuss possible scenarios for the project financing and dilutive impact post the permitting stage. Dilutive.
Sure. I think what will happen is, I mean, by the end of this year, we'll have more or less $10 million left post warrant exercise. So therefore, no major dilution expected until then. Of course, if you look at the capital, you know, let's say $250 million, and that's not the number that's, you know, take that with a pinch of salt. That's just a sort of an industry average. You could expect around $250, $300 million capex, maybe a bit lower. That's a big number. We got to finance that. And generally that's done by way of project finance, means you can get debt that's secured by the project itself, non-recourse financing. So post PEA, we will determine the debt carrying capacity of the project. I don't know what it is, maybe 60-40 sort of debt equity ratio. And that debt is going to require a significant, as I say, let's say 40% equity. So look at Ozone. It's another company that a lot of people compare us to. They just did a big equity raising that is dilutive. And if we build this project ourselves, which is our base case, such an equity raise will happen probably next year. There's no way around it. But of course, we will try to keep it, we'll try to minimize it and keep it as small as we can.
Thanks a lot, Heye. I think that's all the questions that we have for today. I'd like to thank everyone who submitted questions, as well as you, Heye, for the great presentation and the great answers. To everyone watching, if you didn't have a chance to get your questions answered, or if you think of one after the summit, we'll be sending out a short survey, like I said, where you can leave your contact information, and the Osino Resources team will reach out to you directly. You can also find more information, of course, at osinoresources.com. Heye, I'll give it back to you for the final word.
Yeah, thank you. Sorry, I think I used my pitch in the presentation already, so I'll just repeat it because I believe in it so strongly. And that key pitch is, this is a low-risk opportunity and high certainty of significant return in the future. And that's why it's beautiful because, you know, like I said, geologically, financially, largely de-risked. We've got a real project. We've got a real team of people, real shareholders. This is going to become another Otjikoto. You just have to look across the fence to look at B2Gold numbers. Otjikoto is $1 billion project. That's what it's worth. I'm not saying we'll be $1 billion project overnight, but there's significant re-rate coming out of this company in the next 6 to 12 months. So I'm very, very excited about the future. Thank you very much.
Thank you. All right, everyone. Have a good day. Stay safe.